I've got a whole host of people to go to, and I will go to them in just a bit. But before I go to each one of them, and of course, Chris Balakrishnan also joined us right here. I'll go across to Chandra. And Chandra, the official word from Walmart is out, and what really catches my attention is the headline, is the header of that release, and it says, Walmart to invest in Flipkart Group, India's innovative, quote-unquote, e-commerce company. So they're qualifying they're qualifying Flipkart, and they're saying this is India's innovative e-commerce company. But take it away and help us understand very quickly what the official word is besides what has already come out.
That's right. It's finally official. The release from Walmart is here. As Supriya said, they've said Walmart to invest in Flipkart Group, India's innovative e-commerce company. It says this is a significant opportunity to partner with local market in a large, fast-growing market. It also says Flipkart's strong leadership team will be supported by Walmart, Tencent, Tiger and Microsoft. So these are the investors who stay back in Flipkart. It also says that this investment underscores the long-term commitment to India, where company looks to serve customers, support job creation, small businesses, farmers and women entrepreneurs. So this gives you a sense of why they have made this bet. It also says Walmart supports Flipkart's ambition to transition into a publicly listed majority-owned subsidiary in the future. Supriya, that's the most important headline in this release. Walmart has kept a window open for Flipkart's IPO. We do not know when that will happen, but they've clearly said Walmart supports Flipkart's ambition to transition into a publicly listed majority-owned subsidiary in the future. That's a big headline. Walmart keeps option open for Flipkart's IPO. Though they have acquired a majority stake, they have kept that window open, but I think this will be contingent on financial milestones. Walmart has also said that it has signed definitive agreements to become the largest shareholder in Flipkart Group. The investment will help accelerate Flipkart's customer-focused mission to transform commerce in India. And Supriya, this is the official stake sale number. They're saying subject to regulatory approval in India, Walmart will pay approximately $16 billion for an initial stake of 77% in Flipkart. The remainder of the business will be held by some of Flipkart's existing shareholders, including co-founder Binny Bansal, Tencent, Tiger Global and Microsoft. So this is also something we've reported. While Sachin Bansal is expected to exit completely, Binny Bansal will still hold on to his stake in Flipkart. It also says while the immediate focus will be on serving customers and growing the business, they will transition to a publicly listed company in the future. So Supriya, you finally have it. A big confirmation coming from Walmart. More importantly, a Flipkart IPO coming in the future.
Oh, absolutely. That's a big one. But I think what's also catching my attention right now, Chandra, is that it very categorically says that while Walmart and Flipkart will leverage the combined strengths of both companies, they will maintain distinct brands and operating structures. Currently, Walmart India operates 21 best price cash and carry stores and one fulfillment center in 19 cities across 9 states in India, with more than 95% of sourcing coming from this country, aiding suppliers. It goes on to say Krish Iyer, President and Chief Executive Officer of Walmart India, will continue to lead that part of the business. So I think it's very certain that Krish Iyer doesn't become a head of the joint entity. They will continue to operate as two distinct businesses. Is my reading right? They will continue to have two different operating structures. Chandra.
That's right, Supriya. You know, and this also allays a lot of concerns that Flipkart had. If, you know, they had been acquired by Amazon, perhaps that would not have happened, because Amazon India is headed by Amit Agarwal. They were looking to do a share swap. It would have been messy eventually. But I think this is Walmart's message that, look, we know that you guys know how to handle online commerce in India. It's a very different market compared to other markets in the world in terms of payment, in terms of logistics, in terms of supply chain. You guys have built it from the ground up. So we don't want to get into it at this point. We will hold a majority control. This signals our intent in India over the long term, but we are not going to merge your business with our existing businesses. And if you look at it, that actually makes sense. So long-term synergy, we will have to work out if, you know, this will lead to a grocery push, if Walmart will take advantage of Flipkart's payment infrastructure. Remember, they have a UPI wallet called PhonePe, you know, in their Kirana push, in their cash and carry push. But this is a clear signal that there's going to be independence here for Flipkart could continue to operate as an independent entity.
And many people believe that could have been the deal clincher, but who better than a career entrepreneur like Chris Gopalakrishnan, who's joining us on the phone line right here to take that story forward. A man who founded one of the most iconic companies that India boasts of, and that's Infosys, to talk about this mega deal in the Indian startup space. This Chris is in many ways a validation of the India startup story. Many people believe this is the coming of age of the Indian startup story, but the way this has been worded, the way this deal has been structured, where this does give Flipkart independence, this does talk about a Flipkart IPO, and the fact that Walmart is willing to put in $16 billion for a 77% stake initially, like it has said, it's a validation of the India startup story, I would believe, a coming of age for that space.
I completely agree. My congratulations to the founders of Flipkart, Sachin Bansal, Benny Bansal. It will spur another wave of entrepreneurship because success breeds many new companies to be formed. I think Indian consumers will win because of this, because you have now more, deep pockets and options for e-commerce in India. And the startup ecosystem, I think, will significantly benefit from this large exit. It is, as you said, one of the largest or probably the largest investment into India. I think it's good for the Indian economy as such.
Right. Sir, this is Chandra from ET Now Bengaluru. And, Bangalore has perhaps set the trend when it comes to wealth creation. You did it at Infosys many years back. Of course, that was a public listing. This is a strategic sale. But net, what does it mean in terms of wealth creation? Are you a little disappointed that they did not go the IPO route? They decided to go with a strategic buyout. But interestingly, Walmart has kept a window open for an IPO in the future.
So first of all, on the wealth creation, I think we've always said that, India is a significant opportunity. India provides a significant opportunity for wealth creation for entrepreneurs. I think this validates that, and that's why I said, there will be a wave of new startups which are triggered by this success story. On the IPO side, more and more we are seeing that companies are staying private. The IPO may not necessarily be the only exit possible. This is an example of a very large exit without an IPO. So that is also important. New options are emerging for significant wealth creation.
Okay.
Not just a story for the Indian entrepreneurs, it is also a story for investors, and I think it's a stellar story to tell. But I think the window of opportunity for the IPO is also a telling feature. But I'll go across to Vani Kola, who continues to be on the phone line with us. And Vani, the size of this deal and the kind of money that Walmart is willing to put on the table and the kind of organization structures that they're speaking about, with Benny Bansal staying on, and Doug McMillan's own statement talks very highly of Flipkart. I want to understand from you the latent value of the Indian retail business. And Indian online business is roughly just about 1% of the retail pie, but still there seems to be this vote of confidence for India's retail business, that big pie that everybody seems to talk about. Vani?
Yeah, I think the India macro story is very clear. The demographics is skewed toward the young millennials, the digital natives, as we like to call, and even today already on most sites, 80 to 90% of the traffic comes from the mobile, and the penetration of mobile with Geo and the cost of smartphones, the significant growth in tier 2, tier 3 cities. This is about the going forward growth story. This is not about the retail story, and that, the going forward growth story will be about the Indian $1 trillion digital economy, and that digital economy has now been saved over the last decade by efforts of Flipkart and others. And I think the valuation that you're seeing is not so much about the scale that can come from organized retail, which we have seen is interesting, but can never really reach that phenomenal exponential adoption. due to obvious reasons. And I think this is really a big bet that, much like it happened in China, the inflection around 2003 and 2005, that the India digital story have come of age, and we will see a rise in how consumption and the consumption channels will get redefined across the Indian landscape. And I think that's what this signals a very, very strong endorsement.
Indeed, this is a strong endorsement that's coming in, and I'm going to get yet another very important voice on that story. A man who has himself created a lot of wealth for investors, gone public. Sanjeev Bikhchandani is also joining us on the phone line, and I've got a stellar panel that's awaiting me before I go across to them. But Sanjeev Bikhchandani, in some sense, people believe this is coming of age. This is a huge validation for the Indian startup story, the kind of money that Walmart is willing to put on the table, the kind of valuations that we are talking about as far as this deal is concerned. And in many ways, people believe this is going to change the face of the Indian online retail. Many questions there, but I will begin with value creation, not just for investors, but this also has a very inherent big message for entrepreneurs that you can walk away with the big buck.
I completely agree. I think the single most important thing is that a lot of investors were having doubts about whether they can get exits in India and what kind of exits they can get. I think this is a blockbuster exit, and it'll be great for future investments, and it'll give overseas investors a lot of confidence about investing in India in the private company space, not just online, even offline. I think this is super news for investors. And if it's good for investors and it's going to get more investments into India, it is naturally good for the Indian economy, good for India, and good for entrepreneurs. And then there's, of course, the inspirational, message to other entrepreneurs that, listen, it's possible. It can happen. Not everybody can do it, but it can happen. And I think that will encourage a lot of young entrepreneurs, and it'll also give a fillip to the domestic venture capital industry. Because when Indian capital, when the example set by the returns the foreign capital has got in Flipkart, a lot of Indian capital come forward also, and the Indian VC industry will also develop, as will angel investors.
Ani, stay with us. Interestingly, you have a couple of portfolio companies that might do an IPO. Policy Bazaar, Zomato, so many to look forward to as far as InfoEdge is concerned. But I also have a very special guest joining us all the way from Silicon Valley, Vivek Vadhva, a tech entrepreneur. Vivek Vadhva, what is your initial assessment of this mega deal between Flipkart and Walmart? What impact is it going to have, not just on e-commerce, but on entrepreneurship in India?
I think this deal could be a very big positive for the startup ecosystem, because you suddenly now have all this money coming in, and you now have global giants competing on India turf. So that's the good news. Now the bad news is that you now have the big guys competing on India's turf, which means that there's very steep, very formidable competition for anyone in this sector. So good and bad at the same time.
Thanks for that. Thanks for that, Mr. Vadhva. I also want to bring in K. Ganesh, a serial entrepreneur, founder of Growth Story, investor in companies such as Big Basket and Fresh Menu. Sir, your perspective, both as an entrepreneur as well as an investor. Your action.
See, as an entrepreneur, it's a great fairy tale or a story. We have been watching it play over for the last 10 years. There have been lots of ups and downs, lot of critiques, lot of question marks on can Indian entrepreneur, Indian startup ecosystem take such large amounts of capital, give it good return. There have been questions about business model, how can on a per order unit metric business make money, how can it attract valuation, how can it be valued at first they said at $1 billion, $2 billion, 10 billion, 15, 20 billion. I think from a point of view of the entrepreneur, Indian entrepreneur, startup, starting greenfield venture, raising billions of dollars of capital, giving return and exit to investors, it's a great, phenomenal story.
Chris, I want to come to you as someone who knows a thing or two about building brands and building businesses and building mega bucks. I have to ask you this question. This particular deal, many people believe is going to change the dynamics, not just of the online, but the offline retail space as well. The Indian retail market has always been touted as being very attractive, the India consumption story. But, we know that in terms of value, the consumption values are still very low. Brand penetration is in fact even lower. How do you think this deal stands to change all of that? First, the consumption patterns, and B, more so, the dynamics of the online and offline retail space.
See, first of all, we have to look at the larger picture. If the Indian economy continues to grow at 7-8% over the next 20, 30 years, there's huge amount of economic activity, there's huge amount of wealth in the hands of the consumer. The consumer is going to spend that on buying things. And as Vanikola already said, some of that buying will go online for obvious reasons. So brands are going to play a very important role. World over, we have seen that in the internet, typically it's 3 or 4 companies which do which create the big brand, and we are now sure that Flipkart will be one of those brands in India. That's, I think, very, very important for the Indian market. One of our own companies is going to be around for the Indian consumer to buy from. Second, this will definitely trigger more investment into e-commerce, more investment into retail per se. I think it's obvious, right? The brands are going to play a big role. People buy brands over time as the economy grows, as the industry matures. So it is an important moment for us in India.
Right. So stay with us. I want to go back to Sanjeev Bikhchandani because, he, in a sense, is one of India's earliest startup entrepreneurs and one of the earliest companies to, in fact, go IPO with the Naukri success story. Sanjeev, can we expect you to replicate that with some of your portfolio investments? There's a lot of talk about Policy Bazaar going public, Zomato exploring that option. Can we expect more of this to happen in the near future? What can we expect from the InfoEdge group itself?
Well, I think, first of all, we are minority investors in both those companies. So essentially, it's up to the management team and the entrepreneurs. But having said that, both of these companies have ambitions of staying independent and going public at some stage. I certainly don't see it happening in the next 2 years. It'll take some time.
Vanikola, I want to take a question to you. The Walmart press release very categorically says that Walmart supports Flipkart's ambitions to transition into a publicly listed majority-owned subsidiary in the future. So they are on board with the IPO. I'm just curious to understand, and while we are talking about IPOs, the point that Chandra brought up, I'm just curious to understand what sort of financial parameters or financial milestones is Walmart going to perhaps look out for before it actually taps capital markets for Flipkart?
Well, I think, it's no matter public or otherwise, I think it's the same kind of markers that you would look for. Are they growing in market share? Is there a distinct customer repeat and loyalty and category mix that they're demonstrating growth in? All of which over the last 1 year, Flipkart was focused on and pulling ahead with the last investment from SoftBank, Microsoft, Tencent, and others. Are they moving towards better and better unit economics? So I think the growth and repeatability of their customer profile and the depth of penetration into India, not just the urban but metro, but the tier 2, tier 3, which is really where the next 400 million digital users are going to emerge from. I think those would be the markers into any story, whether it's for private investment or for public investment, and being able to provide that strong positioning of how Flipkart has a entrenched role in capturing its customer base across India will have to be what leads into a larger, bigger public offering. Of course, they also have to show who will be the ongoing management team, and that I think is still in a little bit of a flux, but I'm sure all of that will be factored over the next year or two and stabilize before they consider a public offering.
Right. Mani, thanks for that perspective. Stay with us. I want to go across to Chris Gopalakrishnan again. Sir, you know, one thing that's been conspicuous in this Walmart-Flipkart release is really the absence of Sachin Bansal, the co-founder of Flipkart. I mean, we have been reporting that, you know, he's set to exit his stake, exit the company. But even if you look at the quotes from the company, it only has Doug McMillan and Binny Bansal talking about, you know, the potential. So is this also a very bittersweet moment for Flipkart, the fact that it's going to continue the journey minus one of its founders? I mean, you founded and built a very founder-driven organization. So is that perhaps the flip side to this big Flipkart story that we are talking about? That, you know, one of its Bansals is not going to be there anymore. Of course, he's going to walk away a billionaire, but that's where his journey ends as far as Flipkart is concerned.
Chandra, you know, I would just state that, you know, it's congratulations to Sachin and Binny Bansal. They have built it and brought it to the stage and have, you know, received a fantastic exit. Now, who continues, etc., will be decided internally, and I don't want to comment on that. I think today it's for us to congratulate them.
Okay, it's for us to congratulate them. Don't want to get into that, but of course it is a bittersweet moment if you look at it from that perspective. Stay with us. I want to also bring in another special guest who we have, Rahul Chaudhary from Stellaris Venture Partners. We see himself, who was previously with Helion, one of the earliest investors in Big Basket. Rahul, you know, Vani spoke about what this means from an exit perspective, from an investor perspective. Weigh in on that, because exit's really been the bane for the Indian startup story. Will this change the tide, turn the tide as far as that is concerned, help funds like you perhaps raise more money to deploy in Indian startups?
I think it's a very strong validation on multiple counts. I think if you look at 10 years back, nobody ever imagined a company exiting in, you know, double-digit $1 billion. So that's the first one from India and kind of validates the potential that India has, and in my mind, e-commerce is just one space. We'll hopefully see more such exits or events happening in other sectors as well. Also, from an investor point of view, it's a validation of how technology is changing India's, you know, day-to-day consumption. Where earlier, maybe again, you know, a decade back, nobody ever felt that it will be so easy to buy stuff online. But now it is very obvious and very comfortable to do that. So I feel that for investors, hopefully there will be large cash exits. For the ecosystem, there is strong validation that large companies can be created, and subsequently down the line, you know, these are role models that are getting created. So we will see more such companies emerging out of people who have built these businesses within Flipkart.
You know, I'm tempted to take this question to you, Sanjeev Bikhchandani, and I think it's a question that a lot of people are going to be wondering and asking today. Because a lot of people insist, as an online retail player, the obsession with fundraising or to do an IPO is perhaps priority, is perhaps paramount. And then comes this deal. You know, you've got to keep your business humming. And then comes a deal like this, which perhaps makes you focus on operational efficiencies, which perhaps makes you focus on the long-term sustainability of business. And those are two entirely different things. You've really got to, you know, change gears, switch strategy, change, the mindset has to change really. How challenging is that going to be for a company like Flipkart, which has so far in the first 10 years of its existence really been, you know, worried about fundraising, worried about how and when to do an IPO, what sort of cash is being being burnt. And now we're going to talk about, long-term sustainability. How do you make business profitable? What happens from here on as far as operational efficiencies are concerned, innovation and all of that. Two very different strategies, but I think one is going to see a change of gear there. Am I right? Sanjeev?
Hello?
Sanjeev?
Yes?
Sanjeev, could you hear me on that?
Can you just repeat the question?
Yeah, sure. All I'm saying is that, a lot of people say that for an online retail player in India like a Flipkart, the existential questions so far must have been obsession with fundraising or looking to do an IPO and things like that. And now when a deal like this comes in, the strategy and the focus will perhaps change to talking about, the dialogue will be more about operational efficiencies, the dialogue will be more about long-term sustainability of business, and that perhaps needs a mindset, a switch in gear completely. How challenging is this for companies, and in particular, how challenging will this be for Walmart, for Flipkart, sorry?
No, well, look, Flipkart had to do both earlier, which is fundraising as well as operations. You couldn't have done it without operations. What has changed now is that they've got perpetual capital. And perpetual capital from a big balance sheet that can compare with Amazon and therefore can go head-to-head with Amazon as far as capital is concerned, without having to bother too much about raising money from external investors. And I think now they'll be able to focus completely on operations. And they were doing operations earlier, but now completely on operations, which actually will help them. And they've run a good operation so far. It's not as if they've not been focusing on operations. So I think they'll be able to do more of that, and that's good for Flipkart.
Okay, Chandra.
Okay, Supriya, we have another important voice joining us live right here. Hari Menon, the co-founder of Big Basket. He's also the CEO. More importantly, he also raised big bucks from Alibaba recently. And he's focused on grocery, which is Walmart's strong area. Hari, your first reaction to this mega deal?
It's a great thing for the e-com ecosystem, and that's the first reaction from my side. It's that there's more capital coming in, and you'll see now more and more people coming and using the online system and the online play. So that's, I think, from an ecosystem perspective, it's something that's really good. Specifically, if talking about grocery, I think that's it's such a large market, and one of the things I've been constantly saying all along is that the number of players that come into this play, I think it's better for the growth of this particular category, because it's one of the most complex categories, both from an execution standpoint as well as transitioning customers from the existing way they buy to moving online. And hence, if there are more people coming in, there's more noise in the marketplace. I think you'll see more and more people shifting to this. To the toughest category, which is grocery online, and when that happens, I think it benefits everybody who's there in that particular ecosystem, which is grocery.
Right, Hari, you said it's a good thing for the ecosystem, but is it a good thing for Big Basket? Because people are saying with Walmart's entry, grocery is going to become a very important segment for Flipkart. They've not been too lucky in the online grocery space. That's, of course, your core area. They've been big on mobile, electronics and fashion. But are we going to see more competition come in for grocery? How are you going to battle the might of Walmart, though you have Alibaba on your side?
Yeah, so that's exactly what I was saying. So the thing is that this is the single biggest category as far as retail is concerned in India, which is grocery, right? And it's such a large marketplace that it certainly needs more players to come in to move people from their existing ways of buying. So actually, I've always welcomed more people coming in. Otherwise, the onus on building the market is just left to you to do it, to actually transition people. Now, if there are more people, there's more advertising, there's more noise, there's so much more people talking about the benefits of online grocery, and that helps everybody who's playing that game. And fortunately, we've been around for quite a while, focused on this. Customers are happy with us. We built a strong brand in this space. And I think it's only going to help, in terms of growing the market a lot faster than what it has been till now.
Tempted to ask a very important question to all our panelists here, and Vivek, I'm going to come to you and then go across to the rest. Thank you very much, each one of you, being so patient, because I think it's a huge story. We're trying to get you the biggest voices possible, which is why we've got Hari Menon, we've got Vani Kola, Chris Gopalakrishnan, and Sanjeev Bikhchandani also joining us on the phone line as people continue to be with us live on camera here as well. But I'm going to quickly take this question to you, Vivek. And while it's a great thing for Flipkart, and it's an extremely great story as far as investors and exit options and value creation is concerned, but in a lot of ways, the online retail story is perhaps going to be very hotly going to be contested between a Walmart and Amazon and an Alibaba. And many people will turn around and ask that where is the startup India story amidst this all? Vivek.
The ideal situation would be if the Indian venture capitalists had the courage to invest in Indian startups, and that these companies were really provided the funding necessary to succeed on Indian turf. That hasn't happened. So the next best thing is that you have different companies competing on India's turf. What this will do is that it will raise the profile of Indian commerce. It will now provide lots of automation, lots of new technology, lots of improvement to India's distribution infrastructure. So there will be benefits from this. However, I worry about the loss of independence for India startups.
Okay. I'm going to very quickly take one question to Vani and then go across to Chandra to take it forward with some of our guests here in the studio. And Vani Kola, the exactly same point that it'll be great to see Indians compete at that scale. But you know what? The money is actually foreign. The capital that has come in is foreign capital. And we are perhaps now seeing the big guys with global experience and extremely deep pockets, but who all happen to be foreign, now compete on Indian soil. Is this a reality of the Indian startup story? Because we've obviously not seen the huge business conglomerates be a part of this story at all. Whatever little we've seen is startups, and then they've been funded by foreign capital. Is this how it eventually had to pan out? You have an Alibaba and Amazon and Walmart all fighting for the Indian pie, and they're all going to do it on their own now. No more proxies, so to say.
Is it a question for me, Chandra?
Yes, this is a question for you, Vani. This is Supriya.
Yeah, sorry, Supriya. I think we will be surprised how opportunities always re-emerge. If there is anything we have seen that Google comes across and there is suddenly a competition to Microsoft, or Facebook comes across and that's suddenly a competition to Google. So I don't think the story is over yet, because as you yourself said, the penetration of digital in India is just about digital retail is only about 1%. So I think we will see a new impetus and new innovation, and I, for one, never underestimate the power of entrepreneurs to reimagine a different future and reinvent something. So I do think that there is a e-commerce 3.0, maybe 5.0 that we haven't seen. I think India will be a fertile bed for social commerce. And I think there are many formats that we have only seen one format that we are familiar with. I think there are many other formats that will emerge, especially for a company like India, which is as diverse and as non-homogeneous as it is. And India is a very different market than US and China. So I actually think this is the impetus for more innovation in the country. And I definitely don't see this as a game over for e-tailing in terms of opportunity for entrepreneurs.
Right. Interesting perspective, Bani. You don't think it's the end for Indian entrepreneurs. I also want to bring in India's first e-commerce entrepreneur here, the founder of India Plaza. He also wrote a book recently, Failing to Succeed, K. Vaitishwaran. So, one pertinent question is, where are the Indian corporates in this story? I mean, where are the Ambanis, the Tatas or the Birlas? Is this a missed opportunity for them, or are they going to come in the next leg of Indian commerce? One reason why we've been so dependent on foreign capital is because there's just been no domestic participation in the story. On the other hand, you've had existing brick and mortar retailers cry down e-commerce each time. So what explains the absence of the big Indian corporates in this story?
I think the opportunity has been missed for the last 10 years. To be honest, I think a Reliance or a Tata or a Godrej, there are so many of them, huge, large Indian corporates who should have seen the wave of Indian startups when the dot-com boom and the dot-com bust happened. I think 20 years back is when they should have seen the writing on the wall saying, look, future innovation, future high growth is going to come from startups, and perhaps there was an opportunity for them to come and do their incubation, make the investments and start creating an ecosystem. I think they have not. In that sense, the opportunity has been missed. But the good thing about this is that this is the beginning. India is still very, very early in the startup game. I have a feeling the next 20, 30 years, this will continue to grow. So they should still come down and start involving themselves, getting more active in the system. I know I've worked with some of them behind the doors on some strategic discussions, some of these groups. They're all talking, they're all certainly making the right moves, making the right noises. I think they're not succeeding so far because their approach has not been good so far. But hopefully a deal like this will open up their eyes and they'll become far more active and participate, because I think that's key. For Indian startup ecosystem to truly thrive and prosper, it needs two things. It needs Indian corporates participating with Indian funds, because Indian funds bring something very, very important that a foreign fund cannot bring. Basically, a foreign fund brings in money, but they also come with a deadline. Hopefully, Indian funds will come with a more flexible, more open deadline, and thereby allowing Indian startups to actually go spend the time and solve genuine Indian problems. Hopefully, this will open their eyes.
All right. Let me also get in another special guest, Harminder Sani from Wazir Advisors, who looks at this space very closely. So most of the deal details are out. Walmart has also said that it might have some independent members on the board. So I think they're still finalizing the board structure. But if you look at Walmart's track record in online retail, it hasn't been great in the US. Their adventures in China haven't gone down too well. And even in the UK, physical retail, they recently sold Asda. So, what do you make of this Flipkart investment now? Can they really find success in India when they haven't been able to do that in some of the other bigger markets with more GDP per capita?
See, I hope so. There are more so in India. I think the ground is very, very clear. It's only the Amazon primarily with whom they have to fight on the online side of it. And on the offline side of it, so far, they have to only fight with the Future Group and Reliance Retail. And I think and Flipkart obviously with 100 million users and the kind of market share they have as of now, I think it's a much better place to start. And beyond this, it's anybody's say, but like I said, I hope so it works out for them much better this time.
Okay, we have yet another guest joining us live on this very newsy evening. Mohan Kumar from Northwest Venture Partners joining us live from Bangalore. Mohan, your first reaction to the details of this deal is going to be 77%, $16 billion. Of course, Binny Bansal stays on, Sachin Bansal is out. What do you make of the broad contours of the deal, what it means for the ecosystem?
I think overall it's a great outcome for the ecosystem because we have been waiting for the last 12 years to get a deal which is past $1 billion through M&A, right? So I think it's a very positive news to the ecosystem that such a thing has happened in India, and this will probably hopefully trigger more such transactions going forward. Overall, it's positive.
So just hold your thoughts there. I'll go across to Chris Gopalakrishnan. And Chris, I do want to ask you, as somebody who's been in a very competitive industry yourself, obviously this is a market that matters. I mean, estimates suggest that this market is likely to go to $200 billion in the next 1 decade. I want to specifically ask you, what is competition expected to do next? Now that there is a Walmart here with their skin in the game, what do you expect its rival Amazon to do? Will we see Amazon pump in more money up the ante? I mean, what is the expected reaction from a rival like Amazon, who also is a big believer in this India story, wants a pie of it? to do next? Chris?
One, they will have to invest more money. Both companies will have to invest more money. There may be more players coming in, especially if there is a technology disruption, a new innovative model that is, always possible. So I don't say that this is, the competition is over and no more players can come. There's a space for niche competitors. If you look at, regular physical retail, there are large format shops and there are small format shops, and they coexist. So I believe in the online space also, there's an opportunity for niche players, very highly targeted players, etc. More importantly, there will be more money coming into the space now. I think that's, to me, very, very important. I want to answer one more question. See, we have to separate ownership from management. Ownership can be global, ownership can be international. But what is to me important is how the management is structured and who runs the company, etc. And I'm hopeful that, you will have Indian leadership managing all these companies. I think that's what is very important. I also believe that the wealth creation must benefit India. That's somewhat disappointing in this case. The wealth creation out of this, if it's all foreign funds, will accumulate. So we will have more Indian in the future.
Okay. I think there's a bad line. I think Chris is traveling, and we will go back to him in just a moment from now. But I will go across to K. Ganesh. And K. Ganesh, the question really is, how can we ensure we create more internet powerhouses out of India? The debate is now steering towards how this space is going to be dominated by the foreign funds that have come in, the foreign capital that has come in, and now the foreign players who will really be calling the shots and be fighting for that Indian pie. How do we ensure that we build Indian powerhouses out of India with foreign capital but Indian control? And the question that Chandra raised earlier, should Indian corporates put money and put their buck where it really counts? Should they get more active in this space, which they perhaps have not? Ganesh?
Yeah, that has been one of my pet peeves and learnings, right? I mean, there is no reason why Indian entrepreneurs working in India could not have got the initial risk capital and the support from large Indian corporate houses. Now, I am looking at it from 2 points of view. From an Indian corporate's point of view, these guys built companies right in their backyard, operating in a country which they know exceedingly well. They did not see the merit in backing these entrepreneurs, putting in risk capital. If they had done even a fraction of the cash which Indian corporate houses have had, they would be sitting on the gains which now foreign investors are sitting on. That is one aspect. But the other more disturbing aspect is, if you look at today in the US, out of top 10 companies by market capitalization, 7 are tech companies. This was not the case 10 years back. So what has happened? Traditional sectors, old economy sectors, from market capitalization point of view, from value and valuation and value creation point of view, have moved out of the top 10 list. 7 out of 10 are tech companies. The same thing would happen in India in the next 5 years or next 10 years. You would see that. Now, we have reputed, very highly respected, large corporate houses, industrial giants, not taking any action in this particular field. I think I am more concerned about them. The writing is on the wall. Unless they take aggressive bets, move into new age sectors, technology sectors, by coming in early, by supporting, by starting, by playing in this game, they may find themselves extinct in terms of value and valuation. I think that is really the more of a real threat than digital colonization, where how do you move companies which have 50 billion, 100 billion market caps, the industrial groups, into the next generation? They need to invest in technology and technology companies and have a play there, be it health tech, be it education, be it AI machine learning, be it fintech, be it technology for agriculture. I think all of these areas, and they are just not doing it. I think that is a bigger concern than any other aspect of foreign ownership of Indian startups.
Okay, I've got my colleague Rahul Dayama also tracking the story. In fact, he is at the Flipkart headquarters in Bangalore. Okay, we don't have him just yet, but I'm going to take across this question to Sanjeev Bikhchandani. And Sanjeev, while we talk about having a level playing field for everybody who comes in, whether he's foreign or Indian, China hasn't exactly done that, and for every Google they have a company, for every Uber they have a company. I'm just trying to understand from you. Do you believe that model works? The fact that you can dislevel the playing field, protect your entrepreneurs, protect your own startups, and let them go to scale and size and volume. Do you believe that's a model worth pondering over? Can India pick up any lessons from there, Sanjeev?
Sorry, can you repeat that question? Hello?
I'm really trying to understand, China does not have a very level playing field for foreign and its own domestic operators, own domestic startups. And many people believe there is perhaps merit in that approach. You're trying to protect your own startups. It may not accrue to a level playing field, but that's what China has done. And it has yielded them good dividends. It has yielded them really world-class startups. Do you believe there is merit in India to draw lessons from that approach that China has?
It's a more nuanced sort of discussion to be had on this one. So if you allow companies to compete with global companies, then you'll get more competitive companies who can actually not just capture the Indian market, also go overseas. Right? At the same time, if you're competing with global companies, you will be more innovative. The flip side of the argument is that, yes, you are competing perhaps on unfair terms with people who have lots of capital. In very many markets, this is a winner-take-all business with network effects, and therefore it's going to be very difficult for Indian companies to beat foreign companies. So there are two sides of the argument. But fundamentally, if you want to be an open economy that's open to the world, I think you will have to allow foreign companies in, especially if you need the investment. So there are many many aspects of the argument, and this debate can go on for a long time.
All right. We also, Vivek, I want you to comment on that. You haven't been, you've been pretty vocal about the fact that, this is a battle being fought on Indian soil by foreign giants. Are there lessons from China here for India? I mean, we keep talking about hybrid instruments, about how Jack Ma's been managed to retain control despite raising foreign capital, something that Zuckerberg has also managed to do at Facebook. So are there lessons here from what China has been able to do?
As far as the question of India protecting its startups, I've been very vocal about this. I think that the Indian government is making a big mistake by not learning from China. What did China do? China put up every obstacle it could to Western companies coming in and dominating its local ecosystem. It knew that if it allowed the Facebooks and the Googles and the Ubers to come in and dominate the ecosystem, that they would start eating the young. So it protected their startups. The result is that China has dozens of billion-dollar companies right now. It has giants that are taking on Silicon Valley itself. So India has made a big mistake by not protecting its startups in e-commerce. But the battles are just beginning, because this is just one of dozens of areas where there are going to be billion-dollar opportunities, billion-dollar startups. The government needs to wake up right now, needs to look at what happened in e-commerce, the fact that it had to cede control to the foreign companies, and it has to now start applying protections in other parts of the industry so that the local startup ecosystem can succeed and thrive on its own. This is everything from robotics to AI technologies to self-driving cars to on and so on. Bring the technology in, but let the Indian local startups be the ones that create the value and that go public and which own all of the data. There's a lot to be learned here from the loss of the Indian e-commerce system to the foreign giants, because that's exactly what this is.
Thanks for that perspective, and I'm going to thank all my live guests again for waiting with us so patiently. Bani Kola, Mohan Kumar, Chris, and the others. Chris, I want to come back to you on this very pertinent question. Is it time for the Indian government to look at hybrid instruments to empower founders, to ensure that while they are able to raise foreign capital, they still manage to retain control in the boardroom, retain control of the company. This is something that Facebook promoter Mark Zuckerberg has been able to do through, differential voting rights, something that Alibaba's Jack Ma has managed to do through a web of entities that ultimately rolls up to him. So is it time to think in that direction?
Yes, we need to equip our founders, our entrepreneurs with the same set of instruments that foreign companies and foreign entrepreneurs have. So that's very, very important. We need to have the flexibility and the instruments that are necessary. That's one. Second, we need to also make sure that Indian capital comes into ownership of these companies.
Chandra and Rahul, who are both with us, besides our bevy of guests who've continued to be with us, it's important to, it's very important to also point out here the deal for Walmart. I mean, this is also Walmart's largest ever acquisition as well, the $16 billion that it's going to fund in. So, I mean, this isn't a mean achievement just for Flipkart, but even from a Walmart point of view, to grab this pie of the India retail space, they're willing to really put in the top dollar, and this is also the largest ever investment there. And just for the benefit of our viewers, I think we need to recount the story a little and explain to them why Flipkart and why is Flipkart so important. It sells about 8 million products across 80 categories, has 100 million registered users. I mean, where on earth will you get a pie like that? And this is just 1% of the India retail market. I'm talking about the online space being just 1% of the India retail market. I'll go across to Chandra and then to Rahul, because there's exclusive information that Rahul has put out, and Chandra for the key takeaways from the conference call. But Chandra, I mean, as an aside and maybe in a lighter vein, life does catch up. I mean, think about how Binny Bansal and Sachin Bansal were once employees at Amazon, and that they've now built a brand, and they've now handed over the brand to perhaps Amazon's biggest contestant here, the biggest competition. So life does come a full circle in many more ways than one, does it not?
It does, Supriya, and it would have come a full circle even more if they had become employees of Walmart a second time round by doing that deal with, if they had become employees of Amazon a second time round by taking that bid, but they did not go in for that. Walmart was always the serious contender. They've been doing due diligence for 7-8 months. In fact, in the last few weeks, whenever I have asked people on the Amazon angle, they've completely shrugged it off. They said, you know what, SoftBank is the only investor that's really holding out for Amazon. And I think Sachin Bansal also was, looking out for Amazon. So I think there was some sort of a friction even at the board level between the two founders. But Supriya, that's another bittersweet part of this deal. I mean, I've been going through the release, I've been listening to the con call. Not one mention of the other co-founder, Sachin Bansal. I mean, he spent the last 10 years with Binny Bansal building up this company. The only mention he found was, in that employee town hall, Rahul has managed to secure information where Doug McMillan said, apart from Sachin, there are no management changes. I mean, but there is not much of a thank you. There's not much of a goodbye. So I think that's the only bittersweet moment, but at least Sachin Bansal walks away as a billionaire. And you were also talking about the numbers. Here are two numbers for you. Flipkart recorded GMV, which is a gross merchandise volume of 7.5 billion and net sales of 4.6 billion. So that is still a very small pie. And you heard out the analysts covering Walmart in the US asking them again and again that, what upside do you see? What EPS impact is it going to have? So I think Walmart will have to spend a considerable amount of time defending this acquisition, because in the near term, they themselves have said that it is going to be negative as far as the EPS is concerned. But I think this is a long-term bet for Walmart.
Oh yeah, it's a long-term bet indeed, and I think it's only fair that I point out some more figures that are coming out. And on that bit about Binny Bansal and Sachin's parting, I will go across to Rahul on that. But I think Binny Bansal is known to have written a mail to everybody at Flipkart, and he's written that I wish to share with you that Sachin and Flipkart are parting ways. Over the last 11 years, Flipkart has grown to be one of the most recognized brands and the #1 e-commerce platform in India. None of this would have been possible without the vision and leadership of Sachin. He has been instrumental in setting up a great team and defining the culture at Flipkart. I wish Sachin the best of luck in whatever he may choose to do. I'm sure that he will scale even greater heights and keep the startup flag flying high. So that's the word that's come in from Binny Bansal. But before I go across to Rahul, I think it's also important to point out to our viewers, what are investors getting out of this? I mean, a soft bank that about 8 months back had invested in about $2.5 billion is going to walk away with $4.77 billion. That's the appreciation in value that has happened for just one investor like SoftBank. And, you know, I think on social media, it's already been put out saying that SoftBank can actually write off the, can perhaps take this against, offset the losses of housing and Snapdeal against the gains that they make on Flipkart and not pay capital gains tax. So that's just one thread of communication that's going on in social media as well. But Rahul, coming to you, considering you were at the Flipkart headquarters, and before I go back to our guests who've been patiently waiting by, you were at the Flipkart headquarters. Not a word mentioned about Sachin, and I find that a little strange. Like, you know, even in the press release that came in, it was just simply stated that he's going to leave, or the fact that that con call didn't mention him either. What has really transpired, and what else did you pick up while on campus? How are employees looking at this? What are they making of this deal? Do they believe they now have a permanent flow of cash and that's going to be their big advantage?
Supriya, you're right. You know, Sachin Bansal was not even part of the employee town hall. The questions were addressed by Walmart CEO and Binny Bansal on stage. So that's another thing. Apart from no mention anywhere, he wasn't really part of the town hall as well. As far as the highlights of the town hall are concerned, employees did put some questions to the Walmart CEO. He took a very few number of questions in terms of leadership changes, to which he attributed that apart from Sachin Bansal, there will not be any leadership changes at the company. Also good news for employees, because Walmart CEO has indicated that they will do a buyback, 100% buyback of employee vested shares in the coming months. He has, of course, alluded a lot of optimism as far as Flipkart and the technology that they have been leveraging. But you're right, Sachin Bansal really is absent from most of the happenings that we have seen. Quite a silent exit for him, because I've been talking to a lot of employees on the campus. Heavy security, not easy to really get in. But I did talk to a few employees whose larger concerns, apart from their own jobs, really is that, you know, what really happens to their roles, their going ahead in terms of business focus. But they have also rightly raised questions about Sachin Bansal being absent from this entire thing. But he's clearly exiting the company. Employees for now still have a lot of doubts. They're worried how this entire acquisition will play out in terms of merger, group companies, Myntra, PhonePe as well.
Okay. All right. Rahul, just hold your thoughts there, because I've got a special guest, Harish Chawla, also joining us right here on the phone line on ET Now on this big breaking news, a news that many believe will change the contours of the online retail space in India, at least change the dynamics for good. Harish, thanks very much for being with us. We now have the final figures, $16 million for a 77% initial stake. Sachin Bansal is going to be completely out of the company, and fantastic returns as far as investors are concerned. I mean, investors like SoftBank walk away with plenty of value accretion, plenty of value appreciation. What do you believe this deal, and I'm going to go back to the moot question, what does this deal signify for the entrepreneurs, for the investors, for the exits that are probably more profitable and easier in India, and more so for the online retail space? Harish.
Yeah, so no, I think it's a fantastic deal for everybody, every stakeholder in the firm, and I guess Walmart is paying top dollar to acquire the firm, and I see them actually putting their entire might behind to make it pay off and build a big business out in India. Now, as far as the ecosystem goes, I think people will start seeing large exits in India, because clearly you will find that both Western and Chinese strategics will now really make their moves. With this deal, you find that India is going to be on top of every large Western internet company's radar. They've been, we've seen only Google, Facebook really take charge of the Indian market and focus on it. But you find several other players across the world really focus on India and discover that India is a place where actually you can do business, which is not the case in China. So in that sense, if a startup is set up in the right manner, configured in the right manner, and is a valuable piece of a puzzle for a Western strategic, clearly indicates that there is huge value to be built in this market.
You know, Harish, it's an important point that you raised, that India will be on the radar of every big internet company in the world, and primarily in developed markets and also in China. But is this how this thing was supposed to pan out? Because, there will be skeptics out there who will say it's all very good, it's great value accretion, it's a great startup story, and, it's coming of age and all of that. But where is the Indian startup story amidst this all? Because this is a market that's now going to be left to be contested by an Alibaba from China, and Amazon from the US, and, and of course Walmart now. So I'm just trying to understand from you, is this how this story was supposed to pan out? Is this the logical progression, logical trajectory that the Indian startup story is going to take, considering there was so much of foreign funding that was happening in any case? Foreign capital was the big guzzler in any case.
See, again, as I said, depending on which segment you're talking about, if it clearly there is a capital arbitrage, there is a reality that we need to face, that the Indian companies or Indian investors don't have the size of the balance sheets to fund these entities, and the patience either. So the internet business in India is going to be a long haul business, in most segments, that we still have a lot of a market still to come on board. Our disposable incomes are abysmally low for a large chunk of the market. So it's a 20-year game. In a 20-year game, if you put it, we'll probably build a multi-trillion-dollar internet economy in a 20-year time frame. And naturally, you'll find that the kind of players who can take such long calls and pay such high values are going to be the strategic players from the West and China as well. So unless, I think it's a matter of policy. We've opened up our markets to external capital all across. Look at our banking system, insurance, so everywhere. It's been calibrated opening. E-commerce is something, or internet, there's been no calibration at all, because some of these policies are way behind where the market has taken us, which is fine. I think the big challenge is to figure out whether do we have a bilateral kind of understanding with the players who come in. I mean, we are able to obviously put our startups in the US market, but we are not able to do that in China. So that's a policy issue that will come up. But the story was likely to play out like this. You have deep losses because there are new customers coming on board. Neither IPO is unlikely to be a form of exit for investors. Investors do need exits in a 5-7 year time frame. And therefore, the real option is that either you build a profitable business in IPO, or your investors will drag you to a strategic exit. So I think that reality faces entrepreneurs, and then there's no way out of this.
I'm told I've got Hari Menon back on the phone line. Is he there, back with us? Is Hari Menon back on the phone line with us? Because I want to take a phone. Okay. Harish Chawla, just hold your thoughts right now. I'm going to go across to Hari Menon as well. And Hari, while a lot has been written and said, and we've debated this, there's been enough commentary about the Indian startup space. I will quickly ask you this question. In fact, I think Chandra is back on the line with us. Chandra, I think she has a question.
Yeah. Okay. So, Harish, if you're on the line with me, a few years back, or I think it was 2 years back, you wrote a piece on Flipkart about, its existential crisis. From then to now, do you think they've managed to turn things around? I mean, or have they postponed the problem with this Walmart acquisition? What has really changed from then to now? Because fundamentally, if I look at Flipkart, it's the same business model. Mobiles, electronics, the big categories are still the big drivers for them. There is still cash burn. Just want to understand what has changed from your assessment of Flipkart from then to now.
Okay, so I think several things have changed at Flipkart, and one of the big things was that they were quite defocused when I wrote that piece. They had their focus spread out in several directions, and since that their focus is back on execution. The second thing that happened is clearly they left behind all the other players like Snapdeal or the other players that were there about to get funded. Frankly, then Flipkart, by raising capital, managed to be the real, in a sense, a survivor of that period and be a real, competitor to Amazon. Thirdly, the team, I think, has, they've done their restructuring that they needed to. They've got it under a single chain of command. And that execution has forced them to, to become a viable target for Walmart. There was talk of Walmart taking a 20% stake, I think 2 years ago. But clearly, neither Walmart would take a 20% stake in a company in that state of, leadership in this array, nor would it have taken a stake and not had a part to control. So my assessment even that time was that there was no way Walmart would take a minority stake and then see what to do and wait it out on this front. They would rather make a bold move, which they've done. And therefore, the reality is that Flipkart is going to be a very worthy competitor to Amazon, and especially now with Walmart bringing, and having no choice, having paid such a price, they will have to make it work. So you're really going to have a period of fierce competition in this market until one of them breaks away and takes a lead.